Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, after weeks of hefty increases, industry insiders see a possible minor rollback in oil prices next week. This comes as President Marcos announces fare discounts and fuel subsidy. The government is also looking to earmark a 60 billion peso support for the local manufacturing of electric vehicles amid skyrocketing fuel costs. And gearing up for reinvention, how the region's conglomerates must rip up the old playbook to survive and thrive in today's environment. A conversation from Singapore with the head of Bain & Company Southeast Asia, Jean-Pierre Fellenbach. Local oil industry experts see the possibility of a rollback at the pumps as overseas global oil prices fell in the first 3 trading days after the U.S. and Iran agreed to a ceasefire. Diesel prices seen to drop by 2 pesos and 50 centavos to 3 pesos and 50 centavos per liter next week, while gasoline could fall by around 1 peso. Transport Group said this is only a fraction of the sharp increases seen over the past 5 weeks, but added they will still take whatever reprieve comes at this point. The Energy Department earlier warned pump prices are unlikely return to pre-Gulf War levels anytime soon.
Pangloloko na naman ito sa mga tsuper, sa taong bayan. Ano po? Ang laki nung ibinaba sa world market. Dati kapag ka may forecast na may gulo, yung pangalawang araw pa lang nagtataas na sila ng presyo. Pero ngayon nagsabi na bumaba. Ayaw naman nilang magbaba. Yung pagbaba na yan, sir, parang parang masama pa yung loob ng mga oil companies.
Yung magiging rollback sa isang linggo ay malaking bagay na yan, 3 pesos and 50 centavos. Subalit, ang itinatanong ko lang sa DOE, bakit pagkapataas, mabilis silang magtaas?
To help the transport sector cope with high fuel prices, President Bongbong Marcos has announced 2 key strategies following meetings with the Uplift team, the government's group tasked to address the fuel crisis. First, there's service contracting, which will be implemented starting April 15th. Under the program, to be led by the Transportation Department, drivers and operators will be paid for trips before rush hours. All participants will have GPS monitoring to ensure compliance, while commuters will also be given discounts.
Simula April 15, ipapatupad ng DOTR ang Service Contracting Program. Babayaran namin ang ating mga operator at driver ng mula 40 pesos hanggang 100 piso kada kilometro. Dagdag ito sa kanilang kita mula sa pamasahe. Ipapatupad ito sa buong bansa. Sasaklaw sa humigit kumulang 50,000 na PUB, 1,000 operator at aabot sa 15 milyong pasahero. Para naman sa mga commuter, may kasamang hindi bababa sa 20% na diskwento sa pamasahe.
The President has likewise announced a 10 peso per liter fuel discount for public utility vehicles. However, the discount is capped at 150 liters per week and can only be availed at DOE-accredited stations for a period of 3 months.
Magpapatupad tayo ng 10 piso kada litro na bawas para sa public utility vehicle na may maximum na 150 liters kada linggo sa loob ng 3 buwan. Sisimulan muna natin ito sa NCR sa susunod na linggo. Ang fuel subsidy ay ipapatupad lamang sa mga lehitimong gasoline station na aprobado at minomonitor ng Department of Energy upang masigurong mapupunta ito sa tama at hindi ito maabuso.
Looking longer term, the government is considering a 60 billion peso fund to support local electric vehicle manufacturing aimed at reducing reliance on fuel. The package will cover battery electric, plug-in hybrid, and hybrid vehicles. The details of the framework have yet to be finalized. S&P Global Ratings has revised the Philippines' outlook to stable from positive, citing risks from surging energy prices and the ongoing Middle East conflict. The credit watchers said higher oil costs could widen the country's current account deficit, while also pushing up inflation and dampening consumer spending. It also noted slower infrastructure spending as a factor weighing on growth. A stable outlook means the country's credit rating is unlikely to change in the near term, unlike a positive outlook, which signals a possible upgrade. Global consulting firm Bain & Company has tracked Southeast Asia's biggest business groups for 20 years and now warns that the old Conglomerate playbook no longer guarantees outperformance. With us for more from Singapore is Jean-Pierre Fellenbock. He's an advisory partner at Bain & Company and company's chairman of the Philippines. Good seeing you, Jean-Pierre. Welcome to the program.
Thank you for having me on the show, Cathy.
All right, so your reports called for conglomerates to reinvent themselves. Seems aptly framed in the context of the toughest geopolitical shock we've seen so far. But just to be accurate, this was done up well before the escalations in the Middle East.
It was, absolutely.
All right, so in your work with leading conglomerates across the region in about the last 15 or 20 years, what do you think has genuinely changed in the operating environment?
There's been massive changes, Cathy. We started 13 years ago, and when we looked at conglomerates at that time, looking back 10 years, so 2003 to 2013, the performance of conglomerates across Southeast Asia was amazing. They were earning double-digit returns for their shareholders on an annual basis. And not only that, but they were overperforming. This is the left-hand side of the chart. They were overperforming pure play focused companies by almost 10 points. That's unheard of in the Western markets, more developed markets. That's why we called it the Southeast Asian anomaly. And we felt it was predicated on a high growth environment and a privileged access to capital, to talent, to government and regulators that conglomerates had used to their advantage. We felt this might not be sustainable. Now, if you look to the right-hand side of that chart, this is our last and sixth report. We're now looking at the next decade, 2016 to 2025. As you can see, it's a massive change. Conglomerates are now earning a paltry 4% TSR per year on average, and they trade at a discount of 5 points versus pure plays. So clearly the old playbook's not working anymore.
How come? How come the operating environment isn't working out for them anymore? Is it more of the execution, or really that the environment's changed so much that they now have to do a lot more to earn back those double-digit gains?
Yes, it's actually a bit of both, Cathy. So first of all, the environment has changed. In the 2003-2012 decade, growth was actually very high across almost all Southeast Asian markets. While growth is still positive in our markets, it has slowed down considerably in the next 10 years. And conglomerates had a hard time navigating a slower growth environment. That's one. Second of all, I think the markets have become more open, more competitive, and these all advantages of privileged access to government, regulators, capital, talent, those are not working for conglomerates anymore. New advantages have to be gained. And we get a sense of what those are if we look at the best performing of conglomerates.
And the sense that we're getting from this Middle East conflict is that there is the risk of stagflation, faster inflationary pressures, even slower growth. So do you think the impact of the Middle East conflict further fast-tracks the need to rip up the old playbook and take a stab at approaching the business with fresh eyes?
Yes. So first of all, like any crisis, there can be trigger points, for a strong re-examination of playbooks. This one is not the first crisis that companies had to weather in the last 10 years. If we look at the last 10 years alone, we had the pandemic, the COVID crisis, we had the shock induced by the Ukraine war. Now we have the war in the Middle East and the fragile ceasefire, and it's probably not the last crisis. So just increased volatility. Not only it's a trigger point, but it actually raises an interesting question for diversified groups like conglomerates, which is if you have an intelligently diversified portfolio, that does provide an edge against the risk of massive concentration in one sector, in particular if you're owned by family shareholders, also provides more opportunities to take advantage of dislocation in markets.
All right, so diversification is one, but what about the Philippines when it comes to that amid the changing environment? Are we doing a lot better or a lot less when compared with other Southeast Asian conglomerates?
Yeah, so if we look at conglomerates in the Philippines in particular, the case for transformation is very high, Cathy, because Filipino conglomerates in our last report have not done well. I mean, they tend to be in the third and fourth quartile, at least as measured by TSR performance. Yet, those are groups which are very large. They've got strong brands, strong assets, strong balance sheet, deep management, so they can reinvent themselves. I can give just a few examples. I think there are early signs of reinvention, which might be accelerated by the crisis, which we are living through. For instance, one thing which we observe from the best performing conglomerates is that they rotate their portfolio. They exit businesses which are no longer attractive, where they cannot build leadership position, to move into new areas. If you look at a group like Ayala, in the last couple of years, they've started to shed businesses which don't make sense, for their strategy going forward. Some of their industrial businesses, telehealth business, some of their car dealership. If you look at another attribute of strong performing conglomerates, which is to have a very clear sense of how to drive full potential in their different operating units, JG Summit had just announced in their last AGM that they were now requiring the CEOs of their business units to develop a midterm full value creation plan, upon which the scorecards of the CEOs, their incentives, would be anchored. And lastly, just to give you a third example, is the simplification of capital structure. A little bit more than a year ago, Metro Pacific was privatized, simplifying the cascade of listed holdings, which is again the traits of some of the strongest performers. So there are some early signs of transformation in the Philippines, and hope that groups will start to move to a new playbook.
All right, so that new playbook sounds like they got to move faster. Is that correct? And it becomes a tougher ask, considering that the economy here is slowing further.
Yes, moving faster, but also organizing in a different manner. The old model for conglomerates tend to be what we called an owner-operator model, in particular when it's family control, which is a vast majority of conglomerates in Southeast Asia and the Philippines. And it's one where the holding, the group, tends and tries to run the businesses, even though they sit on very diversified industries and different businesses, which are now grown very large. They try and run them from the center. This is actually not a very effective model. It's very difficult to do it across very different industries. It's also quite disempowering for the businesses, which then have a hard time attracting world-class leaders and managers. So what we see, Cathy, starting to happen is a new model, which is the model of what we call an active investor for diversified groups, where the center is very lean, but has some very distinct competencies anchored around allocating capital wisely and managing the portfolio in a much more active manner. It's actually a model which is quite prevalent in more developed markets like Europe or the Americas, but which was quite rare in Asia. It's actually interesting to see a very strong example of a pivot to that model in Asia now with the Jardine Group, the Hong Kong-based Jardine Group, which has a lot of assets in Southeast Asia as well. They made a very public announcement that they were pivoting from that owner-operator model, which they believe, and we agree with that, is not very effective anymore, to an active investor model. It's very early days, Cathy, but the market have saluted that pivot and have been very, very positive. We think that's one path forward for conglomerates in our region.
Can we take some inspiration from maybe emerging stars, if there are any in the Philippines? According to your data, are you seeing any of the emerging stars being reflected in the way Philippine conglomerates are trying to rip up that old playbook?
Yeah, it's a bit early. I hope some of the examples I've given will become emerging stars. But you're right. beyond the grim numbers of 4% TSR, which is obviously way below conglomerates' cost of capital, hides a first quartile of conglomerates across Southeast Asia. That first quartile does very well. They earn 20% annual TSR, which is obviously a very strong number. And they're really made of two groups. One group are companies which in our sixth report, because we are now at our sixth report, have always been in the top quartile. Just to give you one example of a Philippine-based group, the Ricky Razan group of companies, which encompasses ITCSI, Manila Water, First Gen, has always been part of the top quartile, but also includes groups like Sinarmas in Indonesia or Sunway in Malaysia. But in addition, there is another group in that first quartile which tended to be in the bottom of the ranking, which in this last report have made their way, leap to the fore in the first quartile because they've embraced transformation. And a very good example, not in the Philippines at that stage, but in Singapore, is a Keppel Group, which tended to be third or fourth quartile for many years, and have basically thrown away their old conglomerate model. They've divested their funding businesses of offshore marine, more recently their telco business, and really transformed themselves in a more focused asset manager. I believe many of the Philippine groups will have to take a similar path in the years to come.
We have about half a minute, Jean-Pierre. What's that one priority that you would put on a short checklist for conglomerate CEOs here who want to stay resilient amid the oil price shocks?
Yeah, I would say really question how you can add value as a group when you sit across very, very different businesses. And the answer is that you probably need to revisit the focus of the group, be much more focused, much more agile, much more empowering of world-class managers with aligned incentives, and stop trying to meddle in operations in each of the businesses you run.
All right, a lot to do, a lot more challenges. A tough ask there. Jean-Pierre Fellenbach, thank you so much for your insights of Bain & Capital in Singapore. And you're watching Money Talks. Coming up, Israel and Lebanon will enter into direct negotiations as the ceasefire between the U.S. and Iran holds for another day. And as oil-linked inflationary pressures erode purchasing powers, ASEAN central bankers agree to deepen capital market integration and expand access to capital. That report comes after the break. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Israel and Lebanon will enter into direct negotiations after continued attacks on Hezbollah threaten the two-day-old ceasefire between the U.S. and Iran. Oil prices cautiously rebound as peace talks progress. Global benchmark Brent is up 1.1%, trading at $97 a barrel. West Texas Intermediate climbs 1%, sitting at $98 a barrel. Israeli strikes on Hezbollah in Lebanon are putting immense strain on the fragile ceasefire between Washington and Tehran. Iran's foreign ministry warns it will abandon peace talks in Pakistan this weekend if attacks on Hezbollah won't stop. Israeli Prime Minister Benjamin Netanyahu says his government is prepared to sit down with Lebanon, even though it has no direct control over Hezbollah. But he makes it clear that attacks on the group will continue. Meantime, U.S. President Trump warns Iran not to collect tolls from ships transiting the Strait of Hormuz. An Iranian lawmaker says Tehran is charging $2 million per vessel to cross the strait. On Thursday, just 8 ships carrying Iranian cargoes made its way through the Hormuz Strait, contradicting promises to open the waterway for all vessels without fees. For NATO's part, Secretary General Mark Rutte says it is willing to play a role in a possible Hormuz Strait mission. The alliance has been under Trump's crosshairs for being unhelpful to the U.S. and Israel during the conflict, even though the president did not build an alliance before striking Iran.
When it came time to provide the logistical and other support the United States needed in Iran, some allies were a bit slow, to say the least. In fairness, they were also a bit surprised. Nearly without exception, allies are doing everything the United States is asking. The United Kingdom is leading a coalition of countries that are aligning the military, the political and the economic tools that will be required to ensure free passage through the Strait of Hormuz.
The Middle East conflict has prompted the International Monetary Fund, or IMF, to cut its global growth forecast. It will release a range of scenarios in its World Economic Outlook next week. IMF Chief Kristalina Georgieva says the global lender expects near-term demand for financial support as a result of the conflict spillovers.
Given the spillovers from the war, we expect near-term demand for IMF balance of payment support to rise by somewhere between $20 and $50 billion. The reality is we don't truly know what the future holds for transits through the Strait of Hormuz, or for that matter, for the full recovery of regional air traffic. What we do know is that growth will be slower, even if the new peace is durable.
In our continuing coverage of the country's chairship of the Asean Summit this year, integrated finance networks across Southeast Asia are set not only to be a defense mechanism against market shocks. ASEAN financial leaders also push for integration to improve the region's global investability. Our mobile journalist Fatima Baduria has this report.
ASEAN finance ministers and central bank governors are looking to set up open finance networks to strengthen markets even amid crisis. Open finance networks relies on digital innovation to connect financial institutions to third-party providers. Bangko Sentral ng Pilipinas Governor Eli Remolona Jr. says this process can help harmonize governance rules, leading to capital market integration across the region.
We've started it in the Philippines by connecting banks to an investment API, so bank customers can connect to this API. It's called PERA, by the way. So that seems to be working.
As the conflict in the Middle East strains markets, finance leaders are committing to collective efforts for integration. According to them, this will help develop ASEAN as an asset and improve its investability for global investors looking to venture into the region as a whole.
And ASEAN markets are fundamentally investable. The macroeconomics behind most of our countries are fairly sound, and growth has been healthy. But we can do more to strengthen key planks of our domestic market fundamentals.
However, it is not an easy route, and digital innovation can only do so much without macroeconomic fundamentals. While he is not ready to detail initiatives, Remolona says smaller markets like the Philippines would have to give in to bigger market standards in an effort to harmonize with them.
I think the smaller markets have to recognize that the deeper markets have better rules than the rules in the smaller markets, and focus on those rules, but not adopt everything that the bigger markets have. Identify the rules that are really important.
Asian Development Bank President Masato Kanda says strengthening and building well-connected markets have become more than a goal. He sees it as a defense mechanism that can absorb market shocks even in the future.
Transformation only works as a whole of institution effort, and that is how we are approaching it. There is no stronger foundation than deep, well-functioning financial systems.
Kapatid Fatima Baduria, we are One News.
The Asian Development Bank has trimmed its growth forecast for the Philippines this year. The multilateral lender is now projecting GDP this year to remain at 4.4%. That is lower than its December forecast of 5.3%. For 2027, the ADB is projecting the economy to grow 5.5%. ADB Philippines Country Director Andrew Jeffrey says the economy is facing rising external risks brought about by the Mideast conflict, as the country remains heavily dependent on imported fuel. Jeffries underscores the need to strengthen human capital, improve investment efficiency, and protect vulnerable households. Meantime, the ADB also projects inflation to rise 4% in 2026 before easing to 3.5% in 2027. Checking in on the markets, U.S. stock futures little changed as investors keep an eye on the U.S.-Iran ceasefire. Both the Dow and the S&P 500 are down by less than 0.1% each, and the Nasdaq also up by less than 0.1%. Asian markets a mixed bag this Friday. The South Korean Kospi Index up nearly 1.9%. Japan's Nikkei 225 rises 1.5%, and Australia's ASX 200 falls 0.33%. U.S. equities climbed Thursday after Israel and Lebanon announced that they will pursue direct negotiations. The Nasdaq advanced 0.8%, and both the Dow and the S&P gained about 0.6% each. Doubts over the Middle East truce stalled as Asian markets relief rally yesterday. The Kospi tumbled 1.6%. Nikkei shed 0.7%. Hong Kong's Hang Seng slid 0.5%, and the ASX fell nearly 0.25%. U.S. 10-year Treasury yields ticked up to 4.292%, and gold prices climbed to $4,792 per ounce. And a quick check at our own markets on this final trading day of the week. PSEI opens this Friday higher by 6,125, up 0.6%. As for the Philippine peso, it opens today weaker, 59.75 to the dollar from the previous close of 59.43. And before we go, Pope Leo XIV has named Cardinal Luis Antonio Tagle and San Pablo Bishop Marcelino Maralit as new members of the Vatican's communication arm. The two have been appointed to the Vatican's dicastery for communication. Tagle is the current pro-prefect of the dicastery for evangelization, section for first evangelization, and new particular churches. The pontiff also appointed Filipino Archbishop Ryan Jimenez, who is the prelate of Agana, Guam. This means they will be part of overseeing Vatican media, press relations, and digital communications operations. And that is it for Money Talks. I'm Cathy Yang. Catch us again on Monday, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day and a great weekend ahead. I'll see you Monday.